pretty commonly held myth here in New Zealand that there's no capital gains tax. While technically that's true, there are still 10 ways that you can end up paying income tax on the profit you make from buying and selling a property. There are a whole bunch of people out there who do pay income tax on the profit they make from buying and selling houses, some of who expect to pay tax, while others who are frankly taken by surprise by it. It's easy to fall in and out of those 10 different ways to pay tax without taking proper professional advice. My name's Hamish and I'm a director here at IIF Chartered Accountants. I've got a background in helping other lawyers and accountants with managing the tax affairs for their clients to make sure that they don't fall into any of the 10 different income tax traps, and helping them to understand and modify where possible their tax obligations. So as I said, there are a group of people who do expect to pay tax from buying and selling properties. These guys are typically land dealers, developers or builders who pay tax most of the time with certain exemptions. For those guys, it's about understanding the exemptions and making sure they use them where they're entitled to, without falling into any pitfalls along the way. Often though, there's a whole bunch of other people who don't expect to pay tax. They might be a mum and dad who subdivide the back of their family home or rental. It could be someone who buys a rental property but tells the bank that they intend to sell it in a few years' time once the suburb has taken off. Otherwise, often it's people who acquire a resource consent for a property and don't understand the tax obligations from that. The other group of people is those who get caught by what's called the Brightline test. Now, the Brightline test says if you buy and sell a property within a certain amount of time, you must pay tax on that, regardless of whether you bought it with the intention of resale, with an exemption for the family home. Now, for those guys, the key is to understand when the Brightline period starts and stops. So it starts, but in short, on the day that you get the keys to the property, and it ends on the day that you sign a contract to sell the property. For you, if you're thinking about making a non-standard property transaction, so anything that could potentially be taxed, like a subdivision, something you intend to sell, or if you're thinking about getting into small-scale property development, then take professional advice from your accountant before you do anything. So that's before you email the bank, or before you talk to a builder or a surveyor or your lawyer. Talk to your accountant and take professional advice on what the subdivision or what the property transaction could mean for you and your tax affairs. Frankly, the cost of getting it wrong doesn't make it worthwhile not to take that advice. If your accountant isn't a property expert, then I can only encourage you to get in touch with us today, and we're happy to have an initial, no obligation chat with you to point you in the right direction. Thanks for watching.